Good morning, ladies and gentlemen. It's Butch Shorrock, Options University, Monday, October 8th, 2012. Access to this video is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And we just had quite a week in the market, and quite a week in our economy, and quite a week in our country as we saw the first of the debates take place between Obama and Romney, and what we are a very crucial point in our entire economy and in your stock market future. It is very important that you know how to make money both to the upside and the downside, and to take advantage of those things called technical analysis, which gives us our edge in the market. As we saw during the last week, we had plenty of economic news. We had PMI manufacturing on Monday. We had ISM. We had the construction spending. Motor vehicle sales took place on Tuesday. ADP employment report. ISM non-manufacturing index came on Wednesday. Thursday we had a nice surprise, and we had jobless claims, and it was good to see that the jobless claims actually came out better than expectations. And then finally we get to the big one, which took place on Friday, and that was the employment situation, which came out at 8:30 before the market opened on Friday morning. Employment data really got everybody buzzing quite clearly, and you saw lots of news in the media about, and the data was a bit confusing, causing people that certainly have established themselves as experts in the field of business to question its accuracy. Even Jack Welch, the former CEO of GE, came out and said some kind of wild things about Obama influencing the department and getting us false numbers. And so it's kind of interesting because certainly things like that can happen, but when we look on it, we saw we had an unexpected drop to 7.8% when we really were expecting about 8.2%. So this is the first decline below 8% since Obama was inaugurated. And of course the scream was, how could this possibly be taking place when we really don't see it in the economy? And it turns out that there are a couple of different ways that the survey is done, and one of them is done with a household survey where they call certain households and they find out what the employment numbers are. And the unemployment rate reflected an 873,000 spike in household improvement versus the 368,000 drop in August. And so how could we account for this? I mean, if we look at all these people suddenly having jobs, we would expect a GDP going up by 9 or 10% or so. And, my goodness, we know that that's not the case. So how could this possibly happen? Well, over 600,000 now hold part-time jobs, assumed to be a result of them falling off of benefits and needing to work out of necessity. So what are they working? They're working part-time jobs, and this is what comes out. And this may have been in what the surveys came out. So you get a couple of different surveys, and one survey is done by contacting households over the phone, and that's done with 50,000 households. And the other way the surveys are done are to actually talk to the employers, and they gave us totally different numbers. And so what we saw was basically the largest monthly increase in the household survey, where they called the houses, and it was the largest we've seen in 29 years. And so if you actually read the study, you'll see that part-time jobs for economic reasons rose 582,000 in September. Yes, that's correct. Part-time jobs. Why? Because people simply have to work. And put simply, 67% of the new jobs, of the 800 and some thousand jobs reported, were with the household survey, were part-time jobs because full-time jobs just plain aren't available. So that explains why we got that big number with employment situation where it dropped down to 7.8%. So is it a true statistic? Well, it's a true statistic according to take the survey that way, but is it a meaningful statistic? Well, The economy isn't growing at any great leaps and bounds at this point, and you certainly can see that if you look at the economy and speak to the companies. So it's interesting that this would come up at this point on the political side, but it is what it is, and so that was part of what caused our rally on Friday, looking at those big numbers and the big clamor by so many people to say, what kind of nonsense is this? How could we have the largest increase in 29 years? Quite a week in the market. And now we come into this current week where we'll be talking about earnings, where we focus on that. Monday has no economic announcements whatsoever. Tuesday doesn't have much showing up. Wholesale trade comes out on Wednesday. Probably won't move the market. Beige book probably no longer moves the market. Going into jobless claims Thursday morning at 8:30. Imported export prices at 8:30 before the market opens. And then Friday, we have a couple of far more interesting economic announcements. That's the PPI and the consumer sentiment, both of which have been known to move the markets. On the after the market on the 9th, right here, we will see Alcoa begin what many considered the real beginning of earnings season as they announce after the bell Tuesday the 9th. So with that, let's take a look at last week and what happened on Friday. Taking a look on Friday, we see that we had what could be or what might be a topping type signal. As we see, we got a doji out of the SPX. Notice we continue in an upward trend. We spend our time still above this 30-day moving average, and notice that we went up and hit the top of the Bollinger Band. So while we seem to be moving higher, we'll have to see whether we're going to reverse on this kind of news. What trend are we in? We're in an up cycle, getting higher highs, higher lows in a uptrending market with the potential for some kind of reversal and maybe have a pivot here and start heading back down to that moving average as we go through normal market cycles. No real reason to think we're going to have a big pullback, and it looks like we've kind of gotten through that. But earnings will have an influence on where we go in this coming quarter. A fourth quarter of the year is usually the strongest quarter. However, we've had quite a run in the market for the last basically 6, 7, 8 months, and there is some question whether we can keep going at this pace. We do have an election going on, has an influence on the market. Earnings have been all basically downgraded, so we may be able to hit expectations. It'll be an interesting fourth quarter, and we'll see if we follow our normal trend of uptrending earnings and uptrending market because of the earnings announcements. All right, next let's take a look at a little tighter looking at the last 5 days, and we see that during the last 5 days what we got was higher highs, higher lows, and then Friday ended up with this doji. Expectations are we may see a rollover as we've basically gone up and hit our horizontal and our diagonal resistance points. So we might see a pullback as we get these normal cycles. Notice these pullbacks take place a whole lot faster, but we just had one of these. Notice how it only took 3 days to go down, and it took 1, 2, 3, 4, 5, 6, 7, 8 days to return back to the same level. So that's how we see the market move, much faster to the downside than the upside, and we might be ready for a little bit of a downward cycle in this uptrending market, as it will provide for us opportunities to get in at a lower price. Next, let's take a look at the Dow and see how the Dow compared with the SPX. Notice the SPX basically got up to previous highs. Let's see if the Dow followed in that same manner. And as we see, looking at our yellow area, here's our previous high sitting over here, and here we are with the high this week. So we are at a point of resistance. Next resistance above us, we'll be going for all-time highs. So at least highs for the last 5 years. So an interesting time to see whether we're going to pop up during this next quarter. And there are those that'll tell you that we're ready for the next bull market. And if you think about it, we've had quite a long-term pullback, and a bit of a secular bear market. And if we can come out of this recession and come across the entire world, we could be time for another bull market. Don't be surprised if we have a bit of a pullback in this fourth quarter. Remember, we're going to trade what we see, not what we think, and it is a time where we'll definitely have to respond to what the market's doing. Looking at the NASDAQ, we see Apple sold off this week, and of course it's hard for the tech sector to run when we don't see Apple running. So this was our previous high on NASDAQ, and the NASDAQ was relatively weaker than the S&P, as we didn't see it rise to that next high level. So we're off the 30-day moving average, but did not follow through as the S&P and the Dow did. Next, taking a look at the Russell, see what the Russell did. Our same situation. There's our previous high, and basically we are having trouble breaking out. And so what we see coming out of this is we see this triangle, and it's going to break out one way or the other. And so keep your eyes on the Russell to give you a hint of where this overall market may be going, because many times the Russell will give us a 24-hour lead on where the rest of the market is going. So watch that Russell 2000 carefully as to any kind of hint as to what may be happening here in the fourth quarter with earnings. So that it can be a precursor. So watch it. Next, taking a look at the indexes for the week, we saw we had a couple weeks of negative numbers. Notice what we have all this week. Everything is in positive numbers as we went into that nice little up cycle. And we see the Dow up 1.3% for the week, NASDAQ up 0.6%, S&P up 1.4%. Everything sitting up there in double digits, with the NASDAQ, which is not at its previous high, gave us its highest year to date, up 20% out of the NASDAQ. Look at the S&P, up 16%. So quite a year for the NASDAQ from where it started. So nice moves in the indexes this year as we've had this consistent rally taking place from early summer. All right, next, taking a look at the VIX, you see that when we look at the VIX and we look at this period of a couple years, it's kind of interesting. We're down in this area down here. We can call this the no fear. There's not much fear down here. And so volatility is a little lower on some of our options. We're okay with that, but we're just kind of sitting in that no fear, no great panic in the market as we see the VIX staying below that 20 area, which we call our no fear zone. Of course, this area up here, this yellow area, this is our fear zone. Where we get our VIX from is it's basically calculated on the level of put option activity over a 30-day period. If you see a lot of buying of puts, it tells you that that is basically a protection for portfolios, and it causes the index to rise. So we're not seeing this. As we look down at the VIX, we see it's extremely low, on the low side for the last 2 years. So that kind of gives us an idea of what the VIX tells us and why we're interested in this fear index. Looking at a little larger picture of it, you see that we really are at the lows of that. So, the air is probably getting a little thin up here on the indexes. When we see the VIX get this low, it's usually time where we have that down cycle. So we saw the SPX going up. We saw our Doji on Friday, and we very well could see a little bit of a pullback as we go into this week and into earnings. Pullback back to that 30-day moving average, probably not quite yet a change in trend, unless we see some horrible numbers come out of earnings, which, basically the corporations try to protect themselves against. Notice as the bonds are pulling back again, and the bonds are not showing the previous strength, trading in this downward cycle. And remember, we talked about this early in the week when we met last Monday, and I said watch for a sell signal on the bonds as it was sitting up against resistance in this what we would call diagonal channel, trading between the different levels of the diagonals we have drawn there. Bonds, as indicated by TLT, our ETF on bonds, in a downtrend in a down cycle. Next, let's take a look at the financials, and we see that the financials have certainly been leading the market up. Did not quite reach the same level, but had a pretty good day on some of the week as it just kept going up, and then Friday we basically had a little bit of a pullback in the financials as we saw the market sell off. Going into the close, the financials followed that same pattern. So XLF, our ETF for the financials, certainly may be providing us an opportunity to watch. If the overall market pulls back, you will see the financials pull back at least to our moving average. So opportunity in the financials this week if we see the market pull back. Watch Alcoa, it will give you a real indication of what's going on. Watch the Russell, may give you a leading indicator as to what's going on. Next, let's take a look at oil and see what oil has done for us during the past week. And we see that it basically has been consolidating at this lower level, and it really is not near what were its previous highs. Kind of interesting is that crude oil prices did go down a bit on Friday after a big day on Thursday. But if you go to the gasoline pumps in Southern California, the prices are still $5 a gallon out there. So they still manage to get money out during prime travel time in California, don't they? Next, let's take a look at our ETF for gold, GLD, and see what gold did during this week. And we see that gold near a high as we're approaching that $1,800 an ounce level for gold. So gold just keeps right on running up, that flight to safety where people feel that they may have a safe haven there in case of that cliffhanger that we keep hearing about in the media. All right, and finally, let's take a look at Friday and see what kind of volume we had in the overall market. And we see that we're up in the SPY, our ETF for the S&P 500. We see that we're very near to that upward level of the SPY, and we see that we're doing it on basically what has been average volume for the last few months. So no big volume surge as we hit that what could be a top in the spider. So tells us what happened to us during the last week. Average volume, market in an up cycle, giving us a potential reversal signal, but remember, it's not a reversal signal for the short term until we get confirmation. Confirmation would be lower lows and lower highs. So with that thought, we've taken a look at our indexes, taken a look at a couple of our favorite sectors, and we see that the market's just clicking along. We're going into the week with earnings beginning Tuesday night with Alcoa after the market closes, and we have a decent explanation on what happened to those employment numbers suddenly to drop down to 7.8% for the biggest move in the last 29 years, which you and I don't see in the economy. So at least we understand how those numbers came to pass and what's taken place. For those of you that are gold members, stick around. We've got our stocks to watch, see what they did during the last week. And so with that thought, if you'd like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. This is Butch Shorak, Options University. It's Monday, October 8th, 2012. Thank you for being here. And to our gold members, welcome back. And let's take a look at the SPX and see what we can expect to see happen. Above it, we've got some resistance that goes back 5 years at 1485 and then at 1505. But remember, we haven't been there for 5 years. And then above that, there isn't much to stop us. It's just all blue sky above that on the S&P. Below us, we certainly have some support. The 30-day moving average sitting there right near 1440. We'll probably visit that again before we break to the upside a number of times. As you see us just keep crawling up, going higher and higher in this uptrend, spending our time above that 30-day moving average. Remember, the next trend that we're going to see is going to be a sideways trend, but we won't see that until we spend time both above the moving average and below the moving average. So we're in an up cycle, on an uptrend, and very likely to see a bit of a pullback here. These are these healthy pullbacks that really give the market stability, and we expect that we will see that. Notice that as the market goes back, it pulls back a lot faster. Monday, you may expect a bit of a sideways day. As you saw, we got a doji on Friday, and what very well could be a topping signal. Remember, we've got earnings coming out Tuesday night after the market closes on Alcoa, which many consider to be the very beginning of earnings season. Let's take a look at Amazon, see how it did during this week that was, as we were in a total up cycle in our uptrending market. Will Amazon do exactly what the market's been doing, or will it be held back? Let's take a look at Amazon, and we see there we are. Last 3 days, we got our buy signal. We went up into an upcycle. Did not break up through previous highs as we're trading within that zone. If we get a break above the resistance, if you're not already in, if we break above that resistance with a volume, then you certainly have a buy signal. Overall market will certainly influence what Amazon does. So Amazon followed the overall market and has continued to show the strength as a market leader. Let's take a look at Apple, and look at what's happened with Apple. And now it has its iPhone 5 come out, and we see pullback in Apple as we've pulled back to that moving average again. News this last week, there's one of their plants that is producing the iPhone 5 walked off the job, and one of the reasons why we see a 2% pullback, down 14 points for Apple, as we saw a big down day hanging out at that 30-day moving average. Notice the last time we were there was in July, so it's been a while since we've actually been at that 30-day moving average for Apple. Okay, with that, let's take a look. Apple did not keep up with the overall market as it had a bit of a sell-off on news. AutoZone had a breakout. We talked about watching for this breakout. Earnings are not part of what we're looking at for AutoZone, so we got a buy signal on Friday with AutoZone. The next target is up there around that 388, 389 level, so we're headed up to this level. If the market cooperates, AutoZone will move up with the overall market. Now let's take a look at one of our favorite restaurants, Chipotle, and we talked about this earlier in the week. We said we could expect more down trend out of this, and we got it. We're down to that $200 level. Might get a little bounce here, might consolidate. Kind of looks like Chipotle may be headed lower as we see Chipotle having troubles maintaining what it once did. Earnings coming out on October 18th on Chipotle, and remember, once we have those earnings, which is not this week but next week, we could have a whole new stock. Earnings can completely change the complexion and trend of a stock. Next, let's take a look at Google and see as Google is running their earnings. I believe earnings are this week. Looking at Google's earnings, we see they're on the 11th of October, which will be this weekend. Look at that earnings run. We talked about this earlier. We said it just keeps right on going, and we certainly expect it to get up to that line that we had drawn up there as it just keeps cooking into earnings. 10-11 are the earnings on Google. Next, let's take a look at GMCR, going absolutely nowhere. Candidate for a condor, candidate for a butterfly. Use your favorite strategy for a stock that goes nowhere, and that pretty much explains what Green Mountain Coffee is doing. Going absolutely down to nowhere, doing nothing, and kind of sticking with that philosophy. Earnings won't be up for a while. They basically won't be coming in till almost November, so we got a ways off at earnings. Might watch for a little bit of an earnings run, but so far Green Mountain Coffee showing us nothing. ISRG trading at the top of its cycle. That's the new cycle since earnings, where it completely changed its complexion. It's been in a nice sideways movement. Earnings coming up on 10/16, so only 1 or 2 weeks, about 2 weeks away. Not this week, but next week. And therefore, if you're interested in doing a weekly, you might look at one of your long spreads if this thing breaks out of this trading zone that it's been in the entire quarter since earnings last time. Next, let's take a look at MasterCard, and we see that it just keeps right on chugging along. Earnings the end of the month on 10/31, so time to use your weeklies on MasterCard if you so choose to pull some money out of this stock that really keeps heading up with the market, and one of the beneficiaries of the Bernanke QE3. So that's why we see MasterCard ran with that and went off into a new zone. Air could be getting a little thin up here, but earnings is coming up at the end of the month, and it could very easily run all the way into earnings. McDonald's, a little bit of a breakup above the 30-day moving average. Not exactly an uptrending stock any longer, but certainly gave us a buy signal on Friday, and not showing us the strength it once showed us. But there's a gap here that can be filled, and stocks love to fill that gap. So McDonald's has a potential for you bulls if this market continues upwards. Let's take a look at Nike and see that Nike is doing absolutely nothing. Already had earnings, did absolutely nothing with earnings. Nike trading in a zone, going nowhere. So use your favorite strategy for a stock that goes nowhere in order to see if you can get some theta out of Nike, because it's just plain not doing it. Next, let's take a look at Priceline. Priceline broke up with the overall market, no big surprise. Got a little bit of resistance up there at 615, 20 points away. Has not filled the gap from the last earnings program, and we see we will not have earnings out of Priceline till November. Stock that normally has a decent earnings run, and we got a buy signal this week, and we'll get another one if we break above that resistance level of about 650. If we do it with some volume, join the party, and Priceline could be a candidate for all of you bulls. Next, let's take a look at WW Grainger, one we've been watching for a couple weeks, waiting for its breakout, and we got it. Broke out of its previous trading zone, running into earnings. For those of you that kept your eye on this and have taken advantage of it, you got your buy signal, and we have earnings coming up on 10/16, which is next week, as it looks like WW Grainger could run all the way into earnings if the overall market contributes to that move. WW Grainger had a great earnings report last time. Still would not hold through earnings. You never know what you're going to get out of earnings. So all in all, it's been an amazing week. We had the first of the Obama-Romney debates, and we had some amazing numbers come out on unemployment. We went through the explanation of that in the first section of this. And so for those of you that are gold members, thank you for being part of Options University. We appreciate you very much. And this is Butch Shorak, Options University. It's Monday, October 8th, 2012. This is Market Forecast, and we are in an uptrend, in an upcycle, in an uptrend, and the air may be getting a little thin back here, may turn into a very short-term down cycle, which could provide for us opportunities for new entries for those nice little swing trades. Thanks for being here.